What's going on, everybody? Welcome back to my YouTube channel. In today's video, we're going to be talking about my recent 200K FTMO challenge that I thankfully passed. I'm going to start out by giving you guys a deep look into phase 1 and phase 2 on the FTMO dashboard. Afterwards, we're going to take a look at TradingView at some of the actual trades that I took in order to pass the challenge. Now, if you stay tuned till the end of the video, you're going to hear a very valuable, insightful psychology rant that may actually help you pass these challenges with prop firms. So without further ado, let's dive right into it. All right, so here we are inside my FTMO dashboard. The first account that we're looking at, of course, is the phase 1, the evaluation phase. So I'll be the first to say this is not a very attractive equity curve. And I think some of the things that we're going to go over with this analysis of the evaluation phase is going to actually teach a lot of valuable lessons to those of you who may be struggling to pass a challenge. Because the reality is I almost failed this challenge. I had severe drawdown during this challenge and I managed to recover it and then pass the overall profit target. So let's go over this and see where things went wrong and how it was recovered. So first of all, let's take a look at the actual equity curve itself. As I go through the curve here, we can see that initially I was in pretty much instant profit. I got up to about 5% in profit. Where did I peak at? I peaked at $13,500. The profit target is 20,000, so I was pretty close. And then unfortunately, I incurred a bit of a losing streak. I had a few losses in a row, and I actually made it all the way down to negative $13,000. So of course, if you hit the max loss of 10%, which in this case is 20,000 for the 200K account, I would have failed this challenge. So I was about $7,000 away from failing. And then after that, I managed to pick things back up again, got back to break even and then slight profit. The equity curve moves sideways a bit, up and down, and then I hit a bit of a winning streak, had a bunch of good trades in a row and made it to that $20,000 profit target. So again, not the prettiest equity curve, but it got the job done. The verification phase was a lot cleaner. We'll go over that next, and then we'll go over some of the trades that I took and the strategy that I used to pass these challenges. But yeah, not the best equity curve, but it got the job done. So let's move on to some of the other statistics here. FTMO says my consistency score is 90%. I'm not entirely sure what this score consists of. I'm assuming it's, this value indicates the consistency of your trading based on the results of each trading day. A high value indicates more consistent trading. So I'm assuming what really goes into that is the consistency of how you're trading in terms of lot sizing, how many trades you're taking per day, things like that, right? Obviously, they don't want to see you scalping one day and then swing trading for a week and then, day trading and mixing up your styles, going from 5 lots to 30 lots, things like that, right? So overall, I do trade the same exact strategy every single time. So I would assume my consistency is based on that. But let's go over the objectives here. So the minimum trading days is of course 4 days. This took me 36 days. Now, again, this is not ideal. However, prop firms don't have time limits anymore. So there's really nothing to complain about. It's not a rush. Of course, there is such a thing as opportunity loss. However, I'm pretty happy with how long this took. This is not my main priority. This is almost like a side quest for me. So I'm happy to just take my time with it. But it certainly would have been passed a lot sooner if I didn't incur this losing streak right here. This is what made it take so long, because then I had to recover back to break even, which took a while, and then basically restart the challenge and get to the profit target from nothing again. So that made it take probably double the amount of time that it should have, but that's okay. Now, in terms of the max daily loss, this is where I almost failed the challenge. However, my trades are sized mathematically, I know exactly how much I could lose. So obviously I calculate my trades based on, staying within these parameters. So I was just below these parameters. If it got to 5%, which would have been 10,000, I would have failed this challenge. But I made sure to keep my lot sizing in a way where it wouldn't fail if I lost the trades. And then I just wait until the next day to trade again. So that was close. It was definitely tight, not ideal, but I did end up passing that as well. So max loss, as we just discussed in the equity curve, would be negative 10%, so negative 20,000. I made it to just before negative 13,000, so minus 6.4%. So that was within the parameters as well. I passed that. And then of course, eventually I hit the actual profit target of 10%, which is $20,000. I went just over to 10.15%. So all the objectives have been completed. So let's keep scrolling and we'll go over some of the statistics. So one thing I want to mention here is that these statistics here, a lot of people obsess over these. However, they're not the most accurate. They're an accurate representation of the trading period that this account is based on. So for 36 days, these are accurate statistics. However, you can't base the statistics of your strategy on these FTMO stats here. It doesn't make sense. You need to have long-term sample sizes in order to know your true win rate, right? Your true average risk to reward, your true profit factor, things like that, right? So during this 36-day period for this challenge, my win rate was only 44%, which is certainly not great. My overall win rate over a long period of time ranges between 50 to 70%, typically right in the middle there at 60%. That's what I average out as. But again, during this 36-day period, I incurred a losing streak, which obviously affects my overall win rate. So this doesn't look too good. And average risk to reward, there must have been some trades where I closed early, because typically I have a fixed risk reward of 2.45R. So the reason that this is diminished is because I must have closed early, maybe before a weekend or before major news. I don't exactly remember. This was a while ago, so not too sure there. But yeah, this is a small sample size of only 36 days. So these are not true statistics. They're only statistics for that small period of time. So I just want everybody to keep that in mind when you're analyzing your FTMO. Now, moving on to the trading journal, there's not too much to talk about here, to be honest. I'm not going to go over each and every trade. There was a lot of trades here because this challenge did go on for quite some time. Like I said, I incurred a losing streak, so I had to recover from that and get back to break even, first of all, and then get all the way to the profit target. So this is the last part of the statistic page. It doesn't really tell me much because with my 4-hour swing strategy, I trade at any time of day. I'm not trading a specific session because the setups are few and far between. So it doesn't, timing doesn't matter as much for higher time frame strategies. So this doesn't really mean much to me. Clearly I had more profit buying rather than selling. Again, doesn't really matter. That tells me nothing. Market conditions change all the time, so that's really pointless to even think about. Now, the other thing here is the list of assets on which I was most profitable. This also doesn't really tell me much. Maybe if I was more of a day trader and I was only trading 2 or 3 pairs, something like that, this would matter a lot more. But in terms of my 4-hour swing trading style, I have to monitor a large list of assets because, as I said, the opportunities are so far and few between. All this means is that for a period of time during these specific market conditions, AUD, USD, and some of the other major pairs were the most profitable for me. That's certainly not always the case. In fact, from my backtesting, I've noticed that the minor Forex pairs actually perform better with my higher time frame style of trading. So again, for this small sample size, it just so happens that these were the most profitable assets to trade. But this doesn't really give me too much insight into my own personal trading. That's why I keep saying it's better to have a large sample size of data on an actual trading journal, whether it's physical or a digital journal, because then you can truly understand your numbers and statistics. As I said, just to sum this up, this was not the prettiest challenge, but I did get the job done. I do know that my strategy plays out over time, even if I do incur a losing streak. The strategy, the win rate, it's all very consistent and repeatable. Even if I failed this, I would just take another one right after, and it would not be a big deal because you got to remember, sometimes you're going to have losing streaks, right? We're not going to be perfect every single month. Some months are better than others, obviously. So if it just so happens that you started an FTMO challenge or any type of challenge with a prop firm during a period of time where you're having a losing streak, you can just take another challenge afterwards. It's not that big of a deal. If your strategy is valid and it plays out over time, then you can just keep doing it until you pass. All right, now let's take a look at the verification phase. This one obviously has a much cleaner equity curve. This was a much better representation of the strategy. There was obviously no losing streak here, so it's just much cleaner. This was passed in only 3 trades. We'll go over that in a sec. And after I go through these statistics, the breakdown of the verification phase, I'm going to actually take you guys into TradingView and we'll look over some of the trades that I took in order to pass this. And I'll do a quick breakdown of the actual exact strategy that I use when I'm trading these challenges, including risk management. So just quickly going over the stats here. Minimum of 4 trading days. I passed it in literally 4 trading days, so that's cool. Max daily loss, this one was a lot cleaner, only negative 1.37%, which is just under $3,000. Max loss overall was only negative 500, just initial drawdown for my first trade, because as you guys are about to see, my first trade was profitable. So, and then I had a loss in between these two profitable trades, but the loss was extremely small in comparison to the first win here. So the account was still in profit. So this drawdown here, that must have just been from the first trade before it went into profit. So yeah, as you guys can see, there's only 3 trades on this whole challenge. These stats are much better. It says win rate 75%, average risk reward 2R. But again, this is an extremely small sample size, so I could care less about these stats. I only care about the stats on my actual trading journal because it's based on data over a long period of time. For a 4-day period, none of this matters to me whatsoever. So if we go into the trading journal where you can see the actual trades, we're gonna go over these shortly on TradingView, but there was only 3 trades here. Now it shows 4 because on the last one, GBP AUD, I scaled in and doubled my position size. I took 2 separate positions, but on the same trade idea. So really only 3 trades here, and 1 loss on Euro JPY, which was a very small calculated loss, so that's fine. And again, none of these really matter. This is again very, very small sample size, so none of these statistics matter at all. Pretty straightforward. As you can see, this one was a very clean verification, pretty much textbook. So with that being said, let's dive into TradingView and I'll show you guys exactly how I passed this. So here we are in TradingView. This was Euro AUD on the 4-hour time frame, and this was the very first trade of my verification phase. Now I'm only going to go over a couple trades, the ones that I took during the verification, because the initial challenge phase was quite some time ago. I don't even remember which trades I took. I'd have to go deep into my journal, and for the sake of simplicity in this video, we're just going to go over the couple trades that that push the verification to the target. Euro AUD. Now it's funny to look at this right off the bat at current price, because as you can see, my position was way up here, and if we drag the risk reward tool out, if you would hold such a thing, this would be at 8R right now. But that's just not how I trade anymore. Back in the day, years ago, I used to trade, actually even like a year ago, I used to trade targeting very high risk reward, but I just simply don't do that anymore. With this higher time frame style of trading that I teach for free on my YouTube channel, sticking to only the 4-hour time frame, it's very simplistic, and I use the Fibonacci tool to frame my trade, right? So I enter at premium or discount levels, and I simply set my take profit at the opposing level, the opposing swing high or swing low, based on the range that we're dealing within. So in this case, the range was from this high right here to this low right here. I set a limit order at premium prices at the 71% retracement. And so I simply set my stop loss at the swing high that I dragged the fib tool from, and put my take profit to the swing low that I dragged the fib tool to. So it's very straightforward. And every time I target the 71%, it gives me a very consistent, repeatable risk reward of 2.45R. If I were to target the 79, it would be a little bit higher. But for the sake of consistency, I pretty much always go for the 71. The only time I enter at the 79 is if it's a market execution. If I'm analyzing a trade idea and price is already there and I deem it to be valid, then I'll market execute in and around the 79% retracement. But if I'm setting a limit order, it's always at the 71. So let's actually use the replay tool here and get rid of all the downward momentum there, so we can take a look at how things looked when this trade actually played out. So the concept for this trade is very straightforward. And like I said, guys, I teach this for free on the YouTube channel. I have an entire start to finish strategy video for this 4-hour style of swing trading, basically. Now, it's hard to even call it swing trading because sometimes the trades work out in a day or 2 days. That's not swing trading. But sometimes it can be a week, maybe a little more than a week. It all depends on the current momentum of price, right? I can't predict that. But the actual criteria for entering these trades is extremely, extremely simplistic. So I've already gone ahead and annotated these things here for you. I shared this to my Discord community as well, so that's why these are still here. First, we have a liquidity grab and a break of structure to the downside. It's literally as simple as that. And as soon as price begins retracing, that's when I can solidify my swing low and drag the fib tool to identify premium prices. And then I just simply set my limit order. It literally cannot get any simpler than this, guys. Like I can't even explain how easy this is. Like, this is kid stuff. And it's very simple and repeatable. So I get asked this a lot. I wanted to quickly go over this. What determines a liquidity grab from a break of structure? Like, what differentiates the two? And I always say, you don't know if it's a liquidity grab until the break of structure occurs. Okay, so they both have to go together. You can't just identify a liquidity grab by itself before it's fully formed, because that's way too subjective. You're basically guessing. So the only reason I can identify this as a liquidity grab is because price didn't continue to the upside. It wicked out here, and then instead of continuing to the upside to form a proper break of market structure, we very impulsively dropped to the downside, and that formed this break of structure. So because price violated the high up here and then immediately pushed to the downside, violating this low, I can classify this as the liquidity grab because it was basically a false move to purge liquidity from the buy side. And then this is a valid break of structure because, as you can see, instead of just wicking below this low here, we actually continued significantly to the downside. So that's a proper break of structure to me. And this is a very clear liquidity grab. But as I said, you don't know that it's a liquidity grab until this break of structure occurs. As soon as this range was solidified, I dragged the fib tool, set a limit order at the 71, and the rest is history. From the moment of entry to the moment it hit take profit, about 5 days. So that's pretty close to swing trading, right? That's definitely a little longer than usual. My average hold time is 3 to 5 days, but the 5 days is more infrequent. Like typically it's within a few days my take profits are hit. But again, not too bad. Like 2.45R profit is pretty substantial, especially if you're risking 1 or 2% on a 200K account. That's substantial profit. I'm happy with that. And on these challenges, on the topic of risk management, I am always risking 2%. I can't recommend that for everybody. That's just what works for me personally, because I know that my win rate averages out at around 60%. If you have a very low win rate of like 30%, for example, then risking 2% per trade is going to be very detrimental for you, and you're probably not going to see any success with these challenges. But because I know that I have a pretty healthy win rate, and as well as a healthy risk reward ratio to accompany that, I can comfortably risk 2% and know that it's very rare for me to blow a challenge or blow, an account or whatever. So I'm comfortable with that, but that doesn't mean that you should be comfortable with that. You need to know your numbers in order to know how much you can risk. Maybe your win rate only allows you to risk 1% per trade, or maybe your win rate is very low that you can only risk 0.5% per trade, but your risk reward ratio is extremely high. So overall, you're still profitable, but you need to give yourself a little bit of breathing room because your win rate is lower. So you might incur, 4 losses, 5 losses, 6 losses in a row, etc. If you're trading 1 or 2% risk per trade and your win rate is that low and you can incur 5 or 6 losses in a row, you can easily blow these challenges and you'll just be wasting money on challenge fees. So you don't want that, obviously. So I get asked a lot about risk management too, and that's pretty much all I have to say about that. Like, you need to know your numbers so that you can reverse engineer that and understand how much you're allowed to risk per trade without blowing these, the parameters within the challenges, right? So this is pretty much it for Euro AUD. Very straightforward, textbook trade, pretty much non-existent drawdown. Like, there was a little bit of drawdown. That explains the $500 daily drawdown on the FTMO statistics that I was going over, because there was a little bit of drawdown, didn't quite tap into that 79%, but then it went straight to the take profit, which was very, very nice. All right, so this was GBP AUD, the next profitable trade on the verification. I know what you're thinking, this is extremely ugly. I'll talk about this in just a second. We're not gonna go over the Euro JPY trade because it was just such a small loss. I don't even have it marked up still, I don't think. Let me quickly check actually. Euro JPY, I usually delete the parameters afterwards. Yeah, I don't even have it here. Yeah, I get asked sometimes too, like, could you go over losses and stuff? Like, what's the point? They're the same as the wins, but they just didn't work out. Like, there's no point in going over it. The losses don't necessarily mean that you did something wrong. And that's why I really never talk about them. Like, I obviously am not hiding that I take losses. I always talk about the fact that I do take losses because that's the reality of trading. But to overanalyze them and really like make content about it is kind of redundant. It makes more sense to talk about the ones that worked out, because the ones that didn't work out are the exact same, but it's just the opposite end of that probability. Because every single time I trade, it's the same exact criteria. Sometimes it works out, sometimes it doesn't. My overall win rate and my overall risk reward ratio is what allows me to be profitable long-term. It's not that there's something I did wrong when I take a losing trade. I'm actually just following my plan every single time I trade. So again, kind of redundant to go over the losses. So we're going to talk about GBP AUD, and this one is the most significant one because this is what actually brought me to my profit target of 5% on the verification. So as you can see, guys, this is extremely ugly price action. Now we are coming to the end of the fourth quarter of 2023. I often anticipate price action like this, but I wasn't anticipating this to be so frustrating. This took quite some time. So I'm going to highlight where I actually manually exited, and it was literally right there. I can put the screenshot up on the screen if I still have it on my phone. I don't recall. If I do, it'll be up on the screen where I exited the trade. It was literally right at that wick, and I'm so glad that allowed me to pass my challenge, because immediately afterwards we reversed all the way back up past my entry, like into drawdown. Very ugly movement on GBP AUD, heading into December. This one was brutal. I sent this to my community as well. A lot of us were taking the same trade. A lot of us manually exited the trade, but some of the brave souls in the community are still holding this. The take profit is right here. So hopefully upon market open, we just tap into that take profit and everybody's out of their misery. But regardless, the trade idea itself was pretty straightforward. So let's get rid of all this ugly nonsense with the replay tool, and we'll go back to when the trade idea was actually presented. So again, the trade idea is pretty straightforward. Not as much of a clear liquidity grab here, because this high right here, sure, it purged liquidity from all the highs prior to it, all of these right here, but it still didn't surpass the overall swing structure that would be more visible on the daily time frame. So we never surpassed this high here, but you could say that this bullish candle here is an order block, and we respected that and then pushed right to the downside. Technically, there was liquidity grabs here, purging buy side liquidity from all the highs prior, just not the overall swing structure back here. But regardless, we saw a very clear break of structure right here to the downside, significant imbalance right in here. And that right there alone would have been a great trading opportunity as price retraced into it and then melted to the downside and then took out this low right here. So that right there was a really good opportunity. I was not involved in that. However, as price retraced and then broke to the downside again, that prompted me to take this trade idea. So let's talk about this. Let me highlight the market structure violation right here. That I'm going to call a break of structure. Now I know what you're thinking. There's only wicks here, right? It's not really a clear break of structure. And you are 100% correct. That doesn't invalidate the trade for me. It just slightly lowers the probability. So at that point, I have to gauge whether or not I'm willing to risk capital on this trade, even though the probabilities are slightly diminished, more so than usual. If it was a clear break of structure such as this one, I would feel a lot more confident in it. But that doesn't mean that it's an invalid or potentially losing trade. It's still a valid trade. There's just slightly more risk associated with it. And like we were discussing in the last example of the liquidity grab, we don't know that this is a liquidity grab yet. The only way I would know that this is a liquidity grab is if price pushed up high enough to violate this structure here and continue to push past it, creating a break of structure. If that happened, then and only then I could deem this as a valid liquidity grab down here. So as of right now, it was still a violation of this low. It was a break of structure. So as I said, that doesn't invalidate the trade. It just makes it slightly more risky. But especially given the fact that I'm in a challenge phase during this trade, I was willing to take the trade and see how it went. Initially, I believe I only risked 1% on this because I wasn't very comfortable with it. It still fit the plan, but like I said, because of this, I was a little bit less confident. So let's play price forward. Now, very nice rejection here. We filled the imbalance, tapped into this order block, and then pushed to the downside. At this point, I was pretty happy. I made sure that if price hit this take profit, the position was a size where it would pass my profit target. However, as soon as we got here, price reversed pretty aggressively. I believe that there was some GBP news, and that was within this candle here. Let's play price forward. So we came back up again, actually peaked higher than my initial entry, which was not cool. Now, I don't recall where exactly I re-entered. It must have been somewhere within here that I re-entered. I had initially 6 lots, and I doubled that and went with another 6 lots. I was still confident in the overall trade idea. I could see that price was not violating the overall range here. It was not violating the swing high of the range that I identified. So I was overall confident. There was, of course, still risk of me losing the trade. However, this account was already in profit, so it wouldn't have been like a failure if I lost this trade. It just would have been another loss, and I would have looked for the next trade shortly after and eventually passed the challenge, or the verification, sorry. I doubled my risk to 2%, somewhere in and around here, don't recall. And then luckily price pushed down far enough where right here I passed my target profit, so I manually closed both positions. And we all saw what happened next. We came back up higher once again, and then pushed to the downside once more. So now it seems like we've got quite enough momentum to hit that take profit. So hopefully for everybody still involved in this trade, we see that take profit get hit upon market open this week, but we'll see. So that pretty much sums it up, guys. It wasn't the cleanest trade, but it did get me to take profit. And the main thing that I want you guys to focus on here is that market conditions are not always going to be perfect. Ending out Q4 in 2023, this is a great example of that. We see choppy things like this quite often right now across a lot of these pairs on my watch list. That's not abnormal for this time of year. But the thing to remember is that if your strategy is tested, if you know that it plays out over time, then you should be confident in your trading plan. You should be able to take these trades time and time again and have confidence that they will play out. And don't get too hung up on taking losses. And if you fail a challenge or two or three, that's really not the end of the world. I want you guys all to stop putting prop firms on a pedestal, because they're not the end all be all. They're not going to drastically change your life. I mean, they certainly could. It shouldn't be the priority. They can be used as a tool, but they should be used as a tool to build your personal capital and to diversify in other financial areas, business, investments, etc. So please stop putting prop firms on a pedestal, guys. They are an incredible opportunity to take advantage of. And I will personally be taking advantage of them more too. Since I started trading about 6 years ago, personal capital has always been my main priority, and it will always remain that way. So I want you guys to really think about that. And like I said, if you're struggling with passing challenges right now, it's not the end of the world. Just keep going. But in your free time, make sure that you're backtesting. Make sure that you're journaling large sample sizes of data so that you can truly understand your strategy and make the necessary tweaks, rather than just relying on the statistics that the prop firms show you based on the small sample size of your challenge, right? That's not the real data. You need to truly journal and backtest to understand the real data behind your strategy. I really hope that some of the things I talked about in this video resonated with you guys, and hopefully it provides enough insight to help you in your own trading journey. If this video helped you at all, if you valued any of this information that I talked about today, please hit the like button. Subscribe to my channel for future content. I want to provide as much value as I possibly can for free on YouTube. So please hit that subscribe button, and I'll see you all in the next one.